Welcome to the New York Outlook for Thursday, the 25th of January 2024. As usual, starting off with the economic calendar, we've got a couple of high risk news events, the one being unemployment claims and the other being GDP. GDP specifically is quite high impact, and I suggest that you avoid having any open positions prior to the news release and waiting for the news to be released to then fade the news event in the suggested direction of the news release. Whilst unemployment claims isn't as significant as GDP, it's still quite important, and pairing the two together is just not it's just not wise to try and get into a trade beforehand. In terms of the London session, just to quickly recap what has happened, we had a reaction from this primary OB, moving us somewhat to the upside. Unfortunately, I had my trade plan aligned for a short, and that was a loss. I'll go through that quickly and then we can move on to the New York Outlook. So essentially what had happened, let me just add this position on so you can see where I took the loss. Essentially what had happened is in Frankfurt we took out the Asia high, we then reacted to this primary leg OB, and then from there on the 5 minute we had this change of character which validated the secondary leg and thus invalidated the secondary leg for the previously confirmed trend. Um, as a result of that, I was satisfied that my trade plan requirements were met for shorting, because even though we have reacted to this 4HOB, we not considered trading against it because we've built all this IRL, and now that we have indeed validated a secondary leg right here, it made sense to actually take this short position with the objective of targeting this, and on the premise that the protein unconfirmed 4HOB that we were reacting to here will fulfill its objective of breaking the substructure low. However, that didn't pan out, and we pretty much took an immediate loss right here. Perhaps if I zoom in a little bit more, you can see I put my entry on this POI right here, and I covered my stop loss with a bit of space should it be wicked. But yeah, that didn't work out too well in my favor, and I took a loss there. So essentially for this week we're down minus 2R, which is fine. Um, I'm comfortable with the loss. I know it did fit my trading plan, so there's nothing to emotionally tilt me on those trades. Then moving on from there, obviously the secondary leg was then further extended as we pushed higher into this leg. I did consider taking a long position from right around this area, just trying to somewhat find somewhat of an alignment with the fib. As you know, I'll probably have deduced that in the London session, I typically like to ensure that I get an entry somewhere between or at around the 38% level, and then in the New York session, if I'm trying to catch continuations, and a bit more comfortable with catching a continuation from the 50% level. However, having said that, as you can see, it didn't line up quite nicely, and then also there wasn't liquidity in the leg. Whilst liquidity in the leg isn't a major factor, I did have to consider the wide stop loss and trying to make somewhat of a reasonable trade, especially given that GDP is coming up. So I tried to position myself well. I didn't get tagged into this trade right here. It came quite close, but not close enough. And then we did have this break-even point that had we actually entered based on the PMI and ignored the stop loss placement, we would have been break even. But as you can see, we would have been actually taken out at break even later in the day because we wouldn't have moved sufficiently. Also, by the time the lull came, we were already moving downwards, so trying to close your position at the lull didn't make sense. I then considered if it made sense to actually trade during the lull, but I concluded that given that GDP is so significant, it's probably best at this point to wait for the news release and then trade accordingly. Um, so that brings me to the New York outlook right now, and I'm just going to delete those positions. Do still have my loss? Yes. Okay, so moving on to the New York outlook. Essentially, the points from the London outlook remained or still hold, right? So point one was we're reacting to this 4H primary OB, and thus any secondary leg validated opportunities remain valid to long from. And then in terms of shorts, we do have this primary leg that has developed, and then in this, because we have the secondary OB that was validated, it invalidates directly trading based on POIs for this primary leg. So we need a reaction to a particular unmitigated primary leg on the 5 minute, such as this, and then we have the secondary leg generation, and we're happy to short because there is this triangle developed with IRL available to target right here. So, which means for the New York session in particular, there's essentially reasons to trade both directions. It's just about ensuring that there isn't a leg that has developed that invalidates the idea that you're trying to trade from. So for me, for this coming session, I'll wait for GDP news to release and unemployment claims to then give me somewhat of a bias in terms of which direction to trade. Depending on that bias, hopefully it's not mixed news, which would not be ideal. But if it is mixed news, I'll probably focus more on GDP than unemployment and try and see if there's some sort of alignment. However, there's a couple of factors to consider. The first being London session range that will need to be liquidated at some point, and then obviously if New York creates a new high of the day, and we're trying to short, then that's not going to work very well. If we got mixed news, we'll need to have positive USD news for both Redfold and news events to support why a New York high of the day will hold, and then we can potentially look for shorts, perhaps of one of these unmitigated 5 minute OBs. Alternatively, so that would be a short scenario, and then for longs, we could put in a new high of the day, and provided that the news release actually aligns with longing, we can then consider if we can potentially get into a long based on this low of the day and the extreme in a nice fib alignment with a good chain POI or flip supply demand flip POI. However, again, we will need to ensure that London range liquidity is taken out prior to our entry, or prior to our entry, or at least if we can situate our entry below the liquidity level and pricing our stop loss accordingly. So, like I said, there's still opportunity for both direction trading. It's simply about managing the news release, fading it accordingly, and ensuring that from a technical analysis basis, there isn't evidence to suggest that things are against the idea that you're trying to trade. So that's pretty much my New York outlook. I know it's a bit confusing, but um, these are somewhat challenging times and it requires a lot of interpretation and not always ideal for trading, although it does present a lot of opportunity, and there is times when you can make a lot of R, and there's times where you'll take a couple of losses, but overall, as long as you have an edge, know that in the long term it will pan out.